Hello and welcome to Kelp Decoding Investments. A couple of days ago, Sensex crossed 40,000 and Nifty crossed 12,000. What does it imply for an investor? 10 years ago, if we had invested 1 rupee in the Sensex or the Nifty, it would have multiplied to roughly 4 rupees and 25 paisa. During the same period, if we had also put some money in the mid-cap indices or the small-cap indices or the broader indices like the BSE 500 or the Nifty 500, our money would have probably multiplied 5.5 or 6 times. So on an average in the last 10 years, if we had a portfolio of these indices, our money would have multiplied by 5 times. And if we look at this benchmark of 5 times, during the same period, over 200 growth-oriented equity funds also completed 10 years. And guess what? Just about 105 of them beat this 5 times benchmark. In today's video, we'll see how to choose the right equity fund to increase the probability of outperformance of their respective benchmarks. My name is Arpit Agarwal. I bring to you Kelp Decoding Investments, a YouTube channel to help answer all your investment queries. We also have an app called Kelp Decoding Investments on the App Store and Play Store, where you can find a collection of all of these videos together. Let's jump straight into today's video and let's look at the data that is from 1st of April 2009 till 29th of March 2019, a 10-year period. And on the 29th of March 2019, the total AUM of the mutual fund industry was roughly 24 lakh crores. From this 24 lakh crores, let us extract the schemes as per SEBI categorization which pertain to equity. And when we do that, we reach a number of 499 odd growth-oriented equity funds with a total AUM of roughly 8,71,000 crores. And let's shorten this list a bit to roughly 80-85% of it, and let's eliminate the smaller ones like dividend yield, contra or thematic, and we are left with 331 schemes with an aggregate AUM of 7,10,000 odd crores on 29th of March 2019. And from this, let's see how many have completed 10 years. We get a number of 131. So let's pick up the largest category, and the largest category of AUM is in multi-cap funds where there are 55, and of those 55, 21 have completed 10 years, and the AUM of those 21 schemes on the 29th of March 2019 was 93,471 crores. Let us look at the performance of all of these 131 schemes. So if you look at the multi-cap funds, the best performing multi-cap fund gave a return of 24.7% annualized for 10 years, while the worst performing in that category gave less than half of that. You can pause this, have a look at it in more detail, but I would like to present it to you in a different manner, which means going back to my first point, if we had invested 1 rupee in any of these funds, how many times would that 1 rupee have become today? And when we look at that, we find that the best performing multi-cap fund multiplied that 1 rupee more than 9 times, versus the worst performing multi-cap fund multiplied just about 3.2 times, which was much lower than the benchmark, let's say of a BSE 500, which was at 4.9 times during the same period. So when we look at this table, we see that the difference between the minimum and the maximum is fairly substantial. And that difference should warrant us to start thinking that I'm not going to buy every single mutual fund, or I'm not going to recommend, in case you're an investment advisor, every single equity fund. And I have to study this much deeper so that I am able to select the funds which have better performance, and I try and avoid those funds which do not give such great performances. So when we go back to our respective benchmarks and we put our benchmark at 4.9 average across all these indices, which is a fair representation of the market, we set a benchmark of 5 and we say out of these 131, how many have performed better than 5 times and how many have performed less than 5 times. When we look at that number, we come to the fact that 57 of those 131 schemes have not even beaten the benchmark of 5 times. But it's heartening to see that 74 of those 131 have actually beaten the 5 times benchmark, which means there are some great fund managers from some great asset management companies which have very successfully managed to beat that benchmark. The same data let us look at from a perspective of asset management companies and see how are these 131 schemes divided amongst the various AMCs that manage these schemes. And it gives us this table. And what does this table say? This table says that 29 asset management companies manage those 131 schemes that have completed 10 years of performance in the equity growth category, of which 6 AMCs take a significantly large share of that 4,70,000 AUM of 3,27,000 crores. And they manage 43 out of those 131 schemes. And guess what? 77% of those 43 funds that they manage or schemes that they manage have beaten the 5 times benchmark that we set. Only 23% have underperformed that 5 times benchmark. And as we go lower, 15 AMCs which only manage 27,800 crores of AUM and 53 equity growth schemes out of those 131 that have completed 10 years, 38% of them have only managed to beat the benchmark. Now, does this mean that a larger AMC will beat the benchmark more? I don't think so. Because in a subsequent video, when we go into each of these categories, you will see that of those 15 AMCs that manage 53 funds, there are 2 of them which have 4 equity funds that have completed 10 years, and all 4 of them have beaten the benchmark. In fact, in one of our previous tables, we showed you that one fund in the large and mid category had actually multiplied that 1 rupee into 12.3 rupees. And that fund or that scheme actually comes from one of the fund houses which is in that list of 15 AMCs. So yes, a large AMC also has larger resources and a lot more AUM to manage because their performances are better, but that doesn't mean that we ignore the smaller AMCs, because some of these smaller AMCs, based on their fantastic performance, may become the larger AMCs of the future. This now brings us to the point how to select the right scheme. And for this, we just need to do 2 things. 1, we need to know, or we need to research, or we need to understand who the fund manager of that scheme is. So when you study the fund manager, how many years has that fund manager managed money? How many different types of schemes has that fund manager managed? And over the lifetime of the fund manager, has he or she outperformed more number of times than underperformed? You get a higher probability of outperformance in the future. There is no guarantee, but there is a higher probability. The same way, within a mutual fund company or an asset management company, there is a portfolio of schemes because there may be several fund managers. By studying that asset management company and the portfolio of schemes of that asset management company, you need to ascertain how good that whole team is. Because the asset management company is not just one fund manager. There is a CEO, there is an investment committee, there is a risk management committee, there is research analysts. There are so many more people that assist and help the fund generate those kind of returns. So if you study the fund manager and the asset management company well and deep, you're increasing your probability of getting higher returns from that particular team. And that is what makes successful investors. Once you buy an equity fund, don't fill it, shut it, or forget it. Keep reviewing it on a periodic basis. Keep reviewing for any changes that happen of fund managers, any changes that happen within that asset management company, keep reviewing the performance, and if required, not on a short-term basis every quarter, every year, but maybe every 2 or 3 years, do a review of your mutual fund portfolio, and if required, make some adjustments and some switches so that you can take advantage of what's happening around you. We hoped you liked this video and will subscribe to our YouTube channel and even download our app Kelp Decoding Investments from the App Store and Play Store. We would love to hear from you on what else you would like us to prepare in the form of videos. So do write to us at help@kelpmail.com and feel free to write to me directly at Coach Arpit on Facebook and Twitter. Thank you for watching.